Hey guys, Bryan Lebo here with June's monthly update video. The weather's getting hot as hell, and so is our housing market. Just this past weekend, I went to the grand opening of Summerlin's new village called Reverence by Pulte Homes. Now, 2,500 people showed up on Saturday alone. 2,500 people showed up to look at just 6 model homes. Now, I haven't seen a turnout like that in over a decade. But let's get to what you came here to see, actually. All right, first up, let's see how last month's sales came in. We sold 3,282 homes in May. This was a 15% increase over sales last year when we sold 2,864 homes. Now, considering our inventory problems, which we'll get to later, this is an amazing feat. More importantly, this is the highest amount of homes sold in a month since I started tracking back in 2012. Now, if you remember back in 2011, 2012, and 13, the market was on fire. So considering the fact that we're selling more homes now than we did back then, I mean, oof. All right, next let's check out median home prices. For the 7th straight month in a row, home values rose. We ended last month with a median home price of $247,250. This puts us 7.5% over the median price this time last year. What's crazy though is that we're averaging monthly increases of about 1.5% each month this year. Not that this is sustainable or even likely to occur, but should this continue to trend, this would put our median home value at $275,000 by the end of this year. Considering we started the year at only $230,000, this is huge. Okay, now let's check in on our current inventory. As you can see on the screen now, we ended May with only 5,026 homes on the market. This marks 9 straight months of decreasing inventory. Not only did our inventory drop almost 8% last month, but we haven't had an inventory this low since August 24th of 2013, when the market was appreciating over 20%. Considering sales are exceptionally high, meaning demand, and our inventory or supply is so low, this means our market isn't really going to slow down anytime soon. Okay, now let's break down our inventory. As you can see now, only 3.9% of our inventory are short sales, only 2% are foreclosures, and 94.1% are normal or traditional sales. This illustrates just how healthy our market really is. Distressed housing is now only about 5% of our market. So for the first time ever since I started following these metrics, I noticed that West Summerlin didn't even have a single foreclosure on the market, not even one. All right, last but not least, let's check out the NODs or Notice of Defaults. For the first time in forever, the county has actually caught up on filings. So now I can catch you up on 2 months. As you can see now, we ended May with 420 NODs filed. This falls pretty much right in line with what's occurred over the past year. Either way you slice it, I don't expect to see any foreclosures hitting the market and making much of an impact for at least the next year. Okay, now let's wrap this up and see if we can make some sense out of all this. Sales are at a record high, median prices are rapidly rising, our inventory is dropping at a disturbing pace, and distressed homes are no longer much of an influence on our market. So what does this mean and where are we going? Well, quite frankly, I've been discussing this for the past several months. It boils down to economics 101 here, guys. Supply and demand. And if demand is high and supply is low, then prices rise. This is the exact model we've been dealing with all year. While the bulk of the demand is on the lower end of the market, the fact that we now have less than 2 months worth of inventory is a really concerning issue. When you consider the fact that back in 2012, when we were selling these many homes, we also had hedge funds and investors gobbling up properties right and left. Now that the hedge funds have left and few investors are still purchasing, it's startling to see such high demand from mostly owner occupants. For at least the next 3 months, I would expect to continue to see these prices rise, since the word is out in the street that the market's hot. It doesn't take buyers long to realize that homes are selling fast from underneath them. As a result, many buyers are now coming in at list price or above simply to be considered. I just listed a home that I'm flipping for $200,000. I had 9 offers just in the first weekend. Out of 9 offers, only 1 was below list price. Of the 8 that were left, half were over the list price. The problem is really on the low end of the market. Builders aren't building affordable homes anymore, which leaves buyers fighting over resale homes. Now keep in mind, we have a whole new generation of entry home buyers that sat on the sidelines either due to a poor economy and job market and or having watched their parents lose their equity in their homes. This whole generation of young people are just now jumping into the market. So combine this with an emerging Hispanic market, and you have tremendous demand with little to no supply. So while the market is on fire and steadily going up, it's really being boosted from the bottom up. Frankly, I don't see home builders jumping into the affordable home building market anytime soon. Therefore, this inequity should continue for quite some time. Now, before you start worrying about a crash coming, consider the fact that new home prices are right back to where they were 10 years ago during the boom. Meanwhile, we're still 22% below the resale home value peak set in 2007. Considering it's been a decade since the crash, it's quite reasonable to presume that home values will recover within the next couple of years to where they were at the peak. And while prices are steadily increasing, keep in mind that we're only 7.5% above where we were last year. If we were looking at like 20% increases in value over last year, then you'd have some reason to be really cautious. Right now, we're simply looking at a very healthy real estate market. Now, nothing lasts forever, but until we see inventory rising again, I would expect to see these prices continue to increase until the demand starts to slow down. Well, that's it for June, everyone. Thank you for watching. Please be sure to subscribe and stay cool out there. See you guys all next month.